Hello guys, once again I welcome you back to the channel. So as promised, I'm going to be giving a forex trading guide for beginners. But don't worry, if at all you're a professional, I believe that what I'm going to talk about is beneficial to you too. So now, uh, forex, forex trading. For those that are new, this is a market whereby we are not going to be having physical products. But if you do it right, you're going to be making money. So this raises a lot of questions. So when you approach the forex market, I'm not really talking to complete beginners, but basically, if I'm to simplify it, forex, uh, I think it can be completed as foreign exchange. So we are going to be in a business of exchanging money for a profit, for a profit. So in this market, I really don't want to waste a lot of time. In this market, uh, most traders prefer candlestick charts. You get? I'm not going to uh, go into certain details. Candlestick charts. There are those who use line charts. Sorry that here I'm not going to be able to. Let me see. Yes, there are those that use line charts. You get? Someone can use a line chart. Someone can use. There are different types of charts here. Most of these are some of the commonest. Bar chart. A bar chart is just over there. But now, for us, we are going to be using candlesticks. You get? We are going to be using candlesticks. But the main point that I want to bring out to you is that this is a market. So the main purpose we are interested in is to find areas of supply and areas of demand for us to be trading. You get? So basically, you also came to this market uh, just to be able to correctly determine which direction the market will be going, so that you can also join in on that direction and also make money through that. So which means that if I told you uh, rightly determine where you're going, where they're going to go, or where the market is going, you're going to make money. You get? But now, uh, I really want to be open from the start. From the start, if at all it was just as simple as me taking an entry, let's say here, and I be like, let me sell, and the money that I put in really determines this asset to go down, it would have changed the direction to come down. You get? But now I think you realize that most of the time you place an entry and then you're thinking that the market will go in that direction, but it doesn't go that direction. You get? Or sometimes just imagine someone who bought at this point. You get? Is it their money that really moved the market to this point? No, it's not their money. They just also found themselves, or if at all they correctly analyzed or applied certain tools, they they are in profit up to this point. You get? What do I want to bring out? We are in a market. We are in a market whereby certain people are already moving it. You get? So for you, you get a reward for you get a reward for correctly being on the right side, or you get punished for um, poorly predicting where they are going to go. You get? So what do I want to bring out? I want to bring out that uh, this is not gambling, but this is a game of probabilities. You get? There are probabilities, just like in any other. Even if you make any investment, there is a chance. There is a chance, or there is a chance. Actually, there is a chance of an event of failure to happen, failure or success. You get? So now, this one, it is legitimate. You can rightly apply certain tools or certain concepts for you to be on the right side. You get? So that leads us to today's main point. You get? How are you going to be picking a strategy, and which strategies are there, and where do I find the strategies? I'll be giving some answers to this. You get? So basically, you're going to be looking a strategy, you're going to be looking for an approach you're going to be using for you to determine a sell here, so that maybe you take profit here. You get? To be honest with you guys, I made these markings actually before this move that really came. This move, you get? I made them before it really happened. You get? So how are you able to determine like that? Am I always right? Let's say if I mark something like this, that it has to go less up to this point. No, you get? There are moments when it doesn't happen. You get? But then I can tell you that now most times it happens. Or if at all it doesn't reach here, at least it will reach somewhere. You get? And if it is reversing, what happens? You get? So I'm really bringing out this information to those starters. So don't think that let's say the knowledge that I'm going to give, or when you get an approach to the market, it is going to be 100% perfect. I want one of the most important thing that you can pick so far. This is a market that you can rightly determine, but then it is going to be a market of probabilities. Just like in life, we don't have guarantees about what's going to happen in future. You get? We don't have guarantees about what's going to happen in future, but we can correctly already position ourselves, let's say through education, so that we can start to get a better edge of having a good life in future. You get? So now uh, there is something. Um, so now this leaves us to it leads us to something. You get? So now personally, I'm going to divide the approaches or the strategies into three. You get? I'm going to divide the strategies into three. You get? So now, but all of them, they are going to be uh, trying to solve one problem. You get? Each strategy is going to be solving one problem. You get? Finding supply and demand, or finding areas of you selling, which are areas of supply and areas of demand, where those people, or the market makers, actually the market makers, where they will be willing to buy and where they will be willing to sell. You get? So demand areas are going to be areas of buying. You get? And then supply areas are going to be areas of selling. You get? So now each strategy. Now I'm going to start with indicator based strategies. You get? Let me start off with indicator based strategies. Oh, let me start with price action strategies. Now, price action, there are people, there are people, there are people who came up with models. You get? With models whereby someone studies the chart. For instance, this one, I'm going to be moving back and forth. This is a chart of volatility 75, and this is a chart of GBP USD. You get? So I really want to cater for both worlds, because I have people who are interested in synthetic indices and those that are interested in forex. You get? But at the end of the day, you're going to find that there what you need in these markets is just the skill. You get? Either synthetic indices or what, as long as you have a proper approach, or what we are calling a proper strategy, like you'll be able to crash any market that you wish. So you get? So I'm starting with uh, price action. You get? So price action, it's going to be, these are going to be strategies. There are quite a number of them. For instance, for me, the ones that I've come across, ICT, there is a strategy called ICT that I'm a student of, and then some other people have a similar strategy called SMC, but sometimes I think SMC people use ICT concepts, but anyways, I found out that somehow they're different. You get, but but I think the difference mainly lies in the naming. But ICT, there is a guy actually, he has a YouTube channel. You can also check it out. It's called the Inner Circle Trader. Credits to him. So he came up with, he has some good content and concepts about how the market moves. You get, but then uh, ICT and SMC are some of the good non-indicator based strategies, or good price action strategies. So in these strategies, there uh, there are different concepts, you get, that characterize, you get, the different concepts that characterize each part of the movement of this of these candlesticks, or even if it was a line chart, you get. But then actually, even if you're using candlesticks, you take this to be a line, you get, because this has a gradient, like it can have a gradient, these moves, you get, just like in math or physics. Even if you can either use bars or a line to represent data, you get. But then if at all you needed a gradient, you can have it. So you can, but as we can be using these candlesticks, you can also take them in form of a line, because you can see that basically they're moving, they come up and down like that, you get. So so SMC strategies, they are going to be those strategies whereby they will be they will be advising, you get, users to make markings, you get, of a certain characteristic, you get, of a certain characteristic. So now, in those strategies, in ICT or SMC, there are these common things that they agree about. You get the forex market framework, like there is a framework. So in ICT, there is a belief that the market is either in expansion. I'm going to show you an expansion, or a retracement, a reversal, or a consolidation. So before you take any trade, you need to understand where the market is in any of these. You get, so which means at all times it's going to be rotating in this cycle. You get, it will either be expanding, it will be retracing, or it will be in a reversal, or it will be consolidating. You get, by the way, this is a strategy that I love the most also. You get. So now, these people, by that they mean, for instance, there is an expansion over here. You get, there is an expansion over here. This is VIX 75, and then I can say we have a retracement. You get, we have a retracement, and now we have another expansion. You get, we have another expansion just over there. Let me first change the line over here. You get, so we have an expansion. The market expanded to the downward side. You get, we retraced for certain reasons, because there are many reasons and there are more explanations needed to back up this. You get, and now they continue to expand. So this one gives the general, like it first gives like the general behavior of the market. Much as they are going in a given direction, they move in this kind of manner. Even if you turn this chart into a line chart, you'll be seeing highs and lows, highs and lows. But then when you're going overall in a given direction, you get. So that's the other thing that we normally find. So now, after realizing that, so we've seen expansion, retracement, and then we've seen another expansion. Now we have what we call a reversal. You get, a reversal. We can see that overall we left this place, and now we reversed. You get, we reversed to that area. You get, so this move, the whole of this move was a reversal, but also having also having an expansion, you get retracement, and then expansion, and then we started to get expansion retracement, you get. And now the last stage is what we call a consolidation, you get. And now consolidations are going to be those areas, they're going to be those areas where the market is reacting to supply and demand, you get. And then uh, whereby supply and demand is going to be equal, you get. So this is what I mean, you get. And now consolidations, most of the time they will be going sideways, you get. So by this I mean the market reacts, moves, let's say down, we get a retracement down, we move up, and then we react to an area. Actually, by this, in the beginning I was talking about um, supply and demand, you get. I was talking about supply and demand. So now supply was up, demand was down. So if at all we are in a market where the market comes up, and then let's say we find supply, like it reverses here, so we realize that this is an area of supply, so we start looking at an area of demand. So it comes and then it reacts and respects an area of demand, so it goes back up, you get. And then still it reacts to supply, and then it doesn't break through, it comes, so it calls for a consolidation, you get. It calls for a consolidation. So for anyone who would be trading this area here, would and then you're not using any indicators, you get, you're not using any indicators that I'm going to talk about next, you'll be able to determine, if at all you properly determine the area of demand. So basically you can be getting in at areas of demand, and then getting out at areas of supply, you get, at areas of supply, and then you look for entries to sell, you get. But then uh, all this comes to an end, you get, because I told you this is just part of the cycle. The market is not going to do this forever, you get. Remember, we have to have more expansions, we have to have retracements, and then reversals. But then overall, what we are looking at, we return back to the area of original expansion, you get. So we completed our cycle, you get. So we can call this, if at all we highlighted these points as expansion, retracement, reversal, consolidation, we've seen them here, you get. We've seen them here: expansion to the downward side, retracement, you get. So now in SMC, let me also bring out some small concept, you get. People will be like, in that strategy, uh let's say we expand and break the structure, you get. So we create an order block here, you get. We create an order block here. So these people can be like, if at all we expand to the downward side, and then we break market structure, or we get a market structure shift, you get, we create an order block. So as the market retraces, because they've determined the market movements, you get, that they are going to be moving in this kind of manner, you get. If at all they are going down, you get. So they will be marking certain areas, so certain candles, so that when the market comes there, then possibly they sell. Here they sell because they know the market expanded to the downward side, they got a market structure shift, you get. And now when they return here, they take entries, because they know if at all you drop and then you get a retracement, you get a bigger drop, you get a bigger drop. But then these people are too smart that they know where they are going, you get. Because if at all they retraced here, they know they are going to target the area of demand. So when they reach an area of demand, you can see the market reached there. It expanded to the upside. You get, it expanded to the upside. So as it retraces to the order block or to this area of demand, so now they take buying entries. You get, and now here it consolidates. There are strategy, there are concepts that explain consolidations, and they they use to analyze the consolidations so that they can determine either to go for buys or sells. You get? So you really find that if at all you're going to be using um, pure price action strategies, be it in synthetic indices, or even if you come back here to Forex, you're going to find that these are areas of consolidation. When you look at, let's say, a point like this one, you get, we have a little consolidation there, over there, you get. So we expanded to the upside. We have an area of supply. It was, I think I marked it on the H1, you get. So we expanded to the upside, and now here would drop to the downward side, you get, but in the same manner of dropping and then retracing, dropping and retracing, you get. So you can really see that uh, those are some of the approaches, all all deployed for the sake of determining market direction, you get. That's what we are interested in the most, to determine market direction. And I just wanted to show you that you can use that approach, purely that approach, and then you correctly determine the market direction. So now the next strategy the next strategy is, these are indicator based strategies, you get. So some people use technical indicators, you get. Some people use technical indicators, and then these technical indicators aid them in determining market direction, you get, in determining market direction. So let me first delete some of these things. So now, for these indicators, some of them can be on, let's say, let me give some of the most popular ones. Moving averages, you get. A moving average, you get. So someone could use a moving average. Let me change its settings and its visibility. Um, let's make it which color? I think we can make it of that color, and then we can change its period here, or its length. Let's make it a 30 period moving average, you get. So someone could use these are indicator based strategies, you get. So someone could use a technical indicator like this one, you get. A technical indicator like this one. Actually, I'm going to delete let me first delete all the drawings, you get. So that's what I wanted. So the other strategy, there are some people who will use indicator based strategies or approaches. And now these are people who are going to use an indicator like this one, so that it aids you in determining market direction. So now each indicator, actually for indicators there are quite many. Sometimes some people will use a combination of many, you get. Some people will use a combination of many indicators, and then they determine the market direction. And even these ones, sometimes it will depend. This is a 30 period moving average. Someone will be like, if at all, let's say they are using, let's say this one, some of them are used on touches. If at all it comes and let's say it moves up and then it comes to retest this moving average, they will be taking by entries. You can see that even it's giving some kind of relevance to the market direction. You can see that whenever the market crosses below and then you're selling, maybe you would be in profit, you get. So even these ones, you can find a way of also finding a take profit point, you get. Finding a take profit point, but still you can see that it has some relevance to it, you get. As far as taking entries are concerned, you get. So when the market is below and then someone is selling, they can be making money, and when it crosses above and then they're buying, they can be making money. And then for these indicators, you could also use let's say, let me get let's say RSI, RSI, a relative strength index, you get. So for these ones, they are going to be indicators that come here at the bottom of the chart, you get. Then first turn off the moving average here. So for these ones, and then this one, let me make it a little bit more visible. So it could be that so I think I can leave it like this, you get. So someone could use, let's say, an RSI, and then for this indicator, and then for instance, if at all maybe it reaches a level up and then they are selling, you can see that it also has relevance to it. If it's at the bottom, you can see that it started to change, and then someone, let's say, if it touches the bottom, they buy. If it touches the top, they sell, you get. And then for these indicators, some of them you combine quite many. Someone could be like, if at all it touches the bottom, and then for me it crosses above, I can be buying until, if at all it touches here at level, let's say 70, someone would be taking profit, you get. So these are also technical indicators that someone can use, you get, that someone can use. So the other thing, the other strategy would be a combination of both technical indicators and price action, you get. So like using a hybrid, you get. So personally, I could, let's say, by that I mean, for instance, let me turn off let me leave on the RSI. For instance, the RSI touches level 70, and then we get a reversal over there, and then I mark, let's say, this order block, you get. So if at all I'm bringing in the issue of order blocks, so it means I'm bringing in a concept, let's say a smart money concept, you get, a smart money concept. So if at all I bring it in this, I'm combining the use of indicators. So I reach here, and then the RSI is at it's at level 70. It's dropping. It comes to the order block, and now for me, let's say I'm targeting entries below the moving average. So if at all the market drops, so already this area that I got in and I sold and I now got into profit, I'll be calling it an area of supply. And then let's say here previously the market was here, and then it bought to this point, so I can call that an area of demand, you get, an area of demand. So which means if at all we are returning to that area, you get, I'll be targeting this area to be my take profit point, you get, my take profit point. So basically here I'm combining two concepts, you get, but then they are giving me a better edge, you get. So someone can choose to use technical indicators, you get, alongside with price action, or someone could use purely price action by marking up your charts properly well, and then timing them, and then timing so that you can, so that you can uh, so that you can get in, and then you make money, you get. But the last thing that I'm going to really give out, is that um, given my approach, you get, given my approach, it is safe to have an approach whereby you're going to mark up your indicator, no, to mark up your chart, you get. You mark up your chart, for instance, before the market came and tapped here, you get, and then you wait for the market to come there so that you, so let's say you sell, you get. Not sometimes, not let's say being here, let's say it's already moving here, for instance here it's already dropping, and then you start to sell just like right now, you get. So you should have a strategy that helps you to analyze before the market reaches in that area, so that by the time it reaches in that area, for instance, now you have to have an approach of determining where, let's say, the next reversal is going to be, you get, or to determine um, a strategy that will help to determine what's going to happen here, you get, what's going to happen here, because now let's say the market, yes, it has reached here, you get, it has reached here. So what next, you get, what next? And then if at all, let's say we are buying up to which point, you get, up to which point. So you need to have uh, that strategy. So I just wanted to encourage. So for those that are starting out, you get, for those that are starting out, you choose to study any, you get, or you can choose to study all, you get. So where are you going to get the resources and materials? One, yes, YouTube, you can get some good content, you get, you can get some good content. Though really, I'll be honest with you, to get proper concrete proper concrete strategies from YouTube could be quite challenging. Why? For instance, now on my channel, you're going to find that I have lots of videos. You get, lots of videos which are not even in order. You get, which are not in order. By the way, that is one of the issues that I have that maybe I didn't think about when I was starting out. So I could bring out a video on indicators. I bring out a video on price action. I bring out a video just explaining something, really, like really too particular on a certain thing. So it really gets hard for someone to study, let's say, from point A, point B, point C. You get? But then here it is beneficial for someone who has some concepts, let's say, who has a bit of experience, you get, because here you're not going to find things in order. But then if at all you choose, let's say, to learn about indicators, you can be checking out, let's say, my videos on just solely about indicators, and then you start to study, you start to see what I was trying to talk about. You try to ask yourself, which point was I trying to make, you get. So now when you watch it, you go on the chart, you get, you go on the chart, and then on a demo, or you can first even go in the chart and you put those indicators and you start to backtest and you start to see how the market was reacting in relation to what I was talking about. And then if I tell you something, you get, ask yourself what I haven't told you, you get. So you shouldn't be limited to what I only talk about, but then you should be wise and bright enough to also think of what I haven't told you, you get. Personally, I've ever paid for mentorship, you get. I would pay for mentorship, and then people would teach me, professionals would teach me, and then even when they tell you something, you have to ask yourself about what they haven't told you about, you get. So that one will open a whole new experience of learning, you get. So that's the other thing. Now, for those that are going to be interested, let's say, in price action strategies, then you go and check out, let's say, my videos about price action, and then you try to compile, you get. I know it's going to be a dirty work, but trust me, through the process, those are the things that will make you to know more about the market, you get, about the market, you get. I know it's not easy, but I know it's possible, because for me, if at all I have knowledge about it, I believe even anyone else can get. And then learning never ends. Even me, on a daily basis, I take a countless amount of time learning, you get. I go on the chart, and I look at movement, sometimes considering time, you get, considering time, and then even sometimes for me, timing candles, you may time 1 hour candles. Like for me, I'm always intrigued by learning, you get. So I'm always learning a lot of things, just like any other professional does, you get. So 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 that's it. So you choose any wing, and you can also watch a bunch of other YouTubers, you get. And then for those that can have some money for mentorship, you can get someone. If at all there is someone offering to teach, and then they know how to teach, you can request them to join them. And then, let's say, most of the time, by the way, to be honest with you, most of the time, the content that is going to be beneficial or helpful to you in trading, like moving from A to B to C, like some kind of order, you're going to pay for that content, you get. I know you can get free content, I know, you get, but most of the time, the high chances that to get that content, you're going to pay. You get, you're going to pay. Just like me, yes, I give out content here, free content, and many times I can come here and I respond to a question that I got over on Telegram. But trust me, if I told someone wants a proper approach, like my proper approach where I'm moving from A to B to C, like that, then they have to join the paid mentorship program. You get, the paid mentorship program. And now, all I can say, there are no guarantees in this market. You get, I don't move the market, but I also follow footprints. You get, you follow marks, previous marks, and then sometimes you may not be right. You get, so there are no guarantees. You get, and trust me, by the sometimes when you're teaching for people who have not paid, they will think like, how can I say? Sometimes even the information that is so helpful, like in trading, is boring and not interesting at all. And then someone can come up, let's say, with some nice and beautiful indicator setup. It's one that I would have not used MetaTrader 5, whereby an indicator setup, but it keeps on readjusting itself and then giving false signals. But like on chart, it can look good, but when it comes to reality, it can look trash. You get, like when it comes to reality, it just gets you confused. You get, and then you find someone being interested in that, being intrigued in that, and then all for looking for perfection. You get, but if at all you take away the fear of being too perfect, trust me, you're gonna be a good person. So for now, I just wish you the best. I believe I've given a guidance. You get, I've given a guidance on what you need. You get, on what you need or how you're going to approach. So for now, either you go and start looking for, let's say, SMC content, smart money content, or ICT content, or you're going to look for indicator based strategies. By the one of the best indicator based strategies is called BTMM. You get, you can look for it. Personally, I've been lucky that I've been a student of both. You get, someone, I've gotten people who taught me both strategies, beat MM, you get, and then uh, uh, SMC, you get, SMC, and I really thank God that I was able to pay for such, because it really changed my life. You get, and I know even you will access them, and then they will change your lives too. I wish you the best.